just give you a little bit of education on Ichimoku Japanese trading. So this is the one-on-one, Ichimoku one-on-one. So looking at how Ichimoku works, it's usually to find the trend and stay with the trend as long as you can. One of the biggest things that I believe that people need to know about this is just following the crossover. All right, and this is the most simplest technique in Ichimoku. It's actually the basics, level 1. So when you get your crossover, let's say we go back in time, right? Let's go back to this level. All right, so the overall trend direction is bearish, as you can see. And also right here we had a bearish crossover when the red line is crossing below blue. So you stay with the crossover direction, right? Until you get the next crossover. So moving on, look what's happening here. So we have our crossover, which is now bullish. So we're going to stick with the bullish bias, right? So you see how the market's going up. But look what happens here. See how price came below our levels here, our Kijun and Tinkerson level, or you still stay with the bias of the crossover. When you stay and stick with the bias of the crossover, that's how you know you're going to, you go to the smaller time frames, or you wait till price breaks back above our blue line and then you look for an entry. So how that would play out, it broke back above both lines. So if you're trading the daily and if you have the capital to do so, or risk management to do so, this will be how you trade this. And then let's look for our target points. Let's see, we could do that inlay structure from here. Boom, this will be our target points. This will be our 1-to-1. That will give us about 159 pips. Overall, we're looking for 547 pips total. I'm not saying we're going to reach those, but that's how you ideally want to trade this. So we look at it play out. Target number 1 hit, so you would maybe put, you could argue and put a trailing stop at that level, or trail the candles behind and watch the market. And we'll see here, got a reversal candle, but we're still following the crossover direction, right? We're still following the crossover. Now when you see the Kijun go flat, and it did back here as well, when you see that, be cautious, because that may mean the market may pull back to it. And if it does, that means that you could probably look for an entry or re-entry at this position down here for another move to the upside. Or you may want to close your position if you're already in a good trade from here. If price closes below the red line, then that's when you want to close your profit. It looks like market is struggling up here, made support or resistance up here, so may not hit that fourth target. So let's see what happens in here. Stretch that out a little bit. And still having a hard time getting it. Broke back above. We're still following the crossover direction. It came into the zone here, the TK zone. TK zone is between the red moving average and the blue moving average of Ichimoku. So this could be another entry here. Boom. 4th target hit. Close profit. That's 547 pips on there on the US. The euro versus the dollar, US dollar. So that would have been a good trade there. So, and this is on a daily chart too. So it would have been quite a long time, but you're following the trend. The crossover is the trend of the market. Now let's say we had the cloud on here, right? Let's add that. And this is where I'm going to end the education lesson for the day. Looking here, you see how we have a bullish cloud, right? This bullish cloud is letting us know that we are still bullish. However, let's rewind it back a little bit. Let's go back to this point. We're still forming that, so we're thinking bullish, but let's go back further. This is why you don't follow the cloud direction. You follow the crossover direction. All right. Even here, we're still considered technically bullish, looking at that future, but you keep on going back, see what happens. And look at that, very small. And then if we go back one more time, even right here, look how small that is. We got that bullish crossover, and we have that future Kumo that's bullish as well. You go back one more candle, as we go back here, it doesn't even exist anymore. So this is going to tell you the trend direction before the cloud ever does. This is saying start looking to go long. Not saying, and then you got to be aware of, multiple crossovers, because that means you're in a ranging market. But if you ever see this, you stay with the direction of the crossover, and then you're going to have that trade work in your favor eventually. So here, you're still thinking long, because you did think long. If you're going based off this, you're not thinking long. If you're thinking of the crossover, you're thinking long, right? So you're thinking long here. We broke back underneath. You're thinking, oh, maybe it's time to go short, but you're still basing it off the crossover direction. Boom, there's your trade right there. And then we see what happens. And that's how you stay with the trend using Ichimoku. All right, so that's what I have for you guys on Ichimoku 101 today. Hope this makes sense. Hope it works out. Hope you use these Japanese trading strategies, and hopefully y'all got something out of it.